The loudest voices in the room are rarely the wealthy ones. They speak confidently about success, they announce their goals, they broadcast their wins. And yet, when time passes, when cycles turn, when the noise fades, it is often someone else who quietly owns the building, controls the cash flow, and sleeps without anxiety. Someone who rarely spoke, someone who listened, someone who never rushed to be seen. Tonight, this is not a story about shyness. It is not about introversion or personality types. This is a story about attention, about patience, and about how wealth is more often built in silence than in sound. This is a reflection on why quiet people, not invisible, not passive, but calm, observant, deliberate people, often build the deepest and most durable wealth of all. So, let this play gently in the background, as you walk, as you rest, as you think, because this is not advice meant to excite you. It is insight meant to settle you. In every era of human history, there has been noise, markets shouting promises, crowds chasing opportunity, voices predicting certainty. And beneath that noise, there has always been silence. Merchants who waited, investors who observed cycles instead of headlines, landowners who held through decades, not months. Long before algorithms and trading apps, wealth was built by people who understood something deeply uncomfortable. That progress often looks boring, that patience rarely looks impressive, and that attention is more valuable than speed. Quiet people, by nature or by choice, often develop a different relationship with the world. They watch longer, they speak later, they move only when something truly matters. And while society often celebrates boldness, markets quietly reward restraint, not because silence is magical, but because it creates space for clearer thinking. Quiet people tend to listen more than they speak. This is not a personality trait, it is an economic advantage. Listening gathers information. Speaking often releases it. When others rush to share opinions, quiet individuals absorb patterns. They notice tone shifts. They sense hesitation. They detect inconsistency in investing, in business, in real estate. Information does not reward speed, it rewards accuracy. And accuracy comes from stillness. Markets whisper before they scream. Prices drift before they collapse. Opportunities appear subtly, long before they trend. Quiet people hear those whispers. They are less seduced by status. Loud wealth demands performance. Fast cars, public wins, immediate validation. Quiet wealth does not need witnesses, and this distinction matters more than it seems. When money is used to impress, it stops working for you. When money is allowed to compound quietly, it becomes patient. Quiet individuals often feel less pressure to look successful. They buy later, they upgrade slower. They spend with intention rather than emotion, not because they fear risk, but because they value freedom more than applause. And freedom grows fastest when expenses remain quiet. They understand time differently. Noise lives in the short term. Silence lives in decades. Quiet people tend to experience time, not as urgency, but as rhythm. They are comfortable waiting, comfortable holding, comfortable allowing things to mature. This changes everything. Compounding rewards those who can remain still, while others demand action. Real estate grows slowly. Businesses stabilize slowly. Trust accumulates slowly. Quiet investors do not fight this pace. They align with it. They understand that wealth is not built by predicting the next moment, but by positioning for the next 20 years. They are emotionally less reactive. Noise amplifies emotion. Fear spreads faster in crowds. Euphoria multiplies through conversation. Quiet individuals experience emotion, but they are less likely to be swept away by it. They pause, they feel before they act. This emotional buffer protects them from the most expensive mistakes in finance: buying because others are buying, selling because others are panicking, changing strategies because of headlines. Calm is not passive. Calm is controlled energy, and controlled energy builds wealth without exhausting the person holding it. They build systems, not stories. Loud people tell stories. Quiet people build systems. Stories feel good. Systems work quietly in the background. Automatic investments, long-term leases, businesses designed to function without daily attention. Quiet wealth often looks uneventful. No dramatic swings, no public declarations, no constant explanation. Just steady, repeatable processes, executing year after year. This is how wealth survives, not just bull markets, but boredom. They are comfortable being early or late. Noise arrives when something is obvious. Quiet people are comfortable arriving before the crowd or after it has moved on. They do not need confirmation, they need understanding. This allows them to buy when assets feel dull and hold when others lose interest. It allows them to sell when prices feel loud, not when fear demands action. Timing, in this sense, is less about precision and more about detachment. They protect their energy. Noise is expensive. It consumes attention. It fragments focus. It creates urgency where none exists. Quiet people tend to protect their mental energy. They limit exposure. They reduce inputs. They choose fewer decisions. This clarity compounds. Better sleep, better judgment, longer time horizons. Wealth is not just financial, it is cognitive, and quiet minds make fewer irreversible mistakes. They avoid the trap of constant comparison. Comparison is one of the loudest forces in modern life. It whispers constantly. It measures progress in snapshots. It asks the wrong question again and again. Am I ahead or behind? Quiet people tend to disengage from this question early, not because they lack ambition, but because they sense something subtle and important. That comparison collapses time into moments, and wealth does not grow in moments. It grows across seasons. When people constantly compare, they begin to adjust their strategy too often. They sell what was working. They abandon plans that needed patience. They mistake temporary discomfort for failure. Quiet individuals, less exposed to social noise, remain anchored to their own timelines. They do not measure wealth by someone else's chapter 10, while they are still writing chapter 3. This emotional independence allows compounding to remain uninterrupted. And uninterrupted compounding is one of the rarest advantages in finance. They make fewer decisions and better ones. Every decision has a cost, not just financial, but cognitive. Noise creates decision fatigue. Markets update constantly. Opinions shift daily. Predictions contradict each other endlessly. Quiet people naturally reduce inputs. They follow fewer voices. They check prices less often. They review performance periodically, not obsessively. This creates an environment where decisions are made from intention, not pressure. When decisions are fewer, they are heavier, they are considered, they are researched, they are aligned with long-term identity, and most importantly, they are rarely reversed. Wealth grows best when decisions are allowed to mature. They separate action from urgency. Noise equates urgency with importance. Quiet people know better. They understand that urgency is often emotional theater, not economic reality. Markets move, prices fluctuate, news cycles scream, but underneath it all, fundamentals change slowly. Quiet investors wait for alignment. Alignment between price and value, between risk and reward, between action and readiness. They act decisively, but only after patience has done its work. This restraint protects them from entering situations they do not fully understand, and from exiting positions that still deserve time. Urgency burns capital. Patience preserves it. They think in terms of ownership, not activity. Noise glorifies activity. Trades, deals, moves, announcements. Quiet people think in ownership. What do I control? What produces value without my constant presence? What improves with time rather than attention? This mindset shifts focus from motion to foundation, from effort to structure. They are less interested in doing more and more interested in holding better assets, better businesses, better environments. Ownership compounds even when you are asleep. Activity demands constant energy. Quiet wealth chooses the former. They respect boredom. This may be one of the most misunderstood advantages. Boredom. Most people flee from it. They mistake it for stagnation. They escape it through risk. Quiet people tolerate boredom. They understand that boredom often signals stability. A stable investment feels dull. A well-run business feels repetitive. A sound financial plan feels uneventful. But uneventful is not unproductive. It is sustainable. Quiet individuals allow their money to become boring because boring is predictable, and predictability allows peace. Peace allows long-term thinking, and long-term thinking is where real wealth lives. They let identity precede income. Many people chase wealth, hoping it will change how they feel about themselves. Quiet people reverse the sequence. They cultivate stability first, discipline first, patience first. They build an identity that can hold wealth before wealth arrives. This prevents self-sabotage because money amplifies habits. It magnifies tendencies. Those who are impulsive become more impulsive. Those who are calm become more deliberate. Quiet people unconsciously prepare themselves for the responsibility of wealth long before the numbers reflect it. So when income grows, their behavior does not fracture, it simply scales. They understand that wealth is a side effect. Noise treats wealth as a destination. Quiet people treat it as a consequence. A side effect of good decisions repeated calmly, of stable behavior under pressure, of patience applied consistently. They do not chase returns. They build environments where returns occur naturally. They optimize for sleep, for clarity, for time. Money follows. Not dramatically, not suddenly, but steadily. And steady wealth has a weight to it, a permanence, a quiet confidence that does not need explanation. And this brings us to something deeper than strategy, deeper than psychology, deeper even than money itself. Because beneath all of this, beneath patience, silence, and restraint, there is a human truth quietly shaping every financial outcome, a truth about who we become when no one is watching. Silence has always frightened humanity. We fill it with conversation, with stimulation, with distraction. But silence reveals truth. It reveals whether a decision stands on conviction or on validation. Quiet people often discover early that wealth does not change who you are. It amplifies it, so they become stable first. They cultivate patience before profit, restraint before reward, identity before income. This is why, when wealth finally arrives, it does not destabilize them. They do not need to announce it. They do not need to defend it. They do not need to accelerate it. They allow it to exist as a quiet extension of who they already are. In a world that rewards noise, quiet wealth feels almost invisible, but invisibility is not weakness. It is insulation. Quiet people do not chase wealth, they prepare for it. They listen longer than they speak. They wait longer than they rush. They value peace more than proof, and slowly, almost without drama, their financial lives begin to mirror their inner ones. Stable, resilient, unrushed, because in the end, wealth is not built by volume. It is built by clarity, and clarity lives best in silence. If you enjoy calm reflections about wealth, behavior, and a long game of money, subscribe for more quiet money, and remember, true wealth does not announce itself, it arrives quietly and stays.